Hello students, hope you all are well. The sixth chapter, which is called the retirement or a death of the partner, is going on. The previous video, few questions from illustration as well as from exercise also I have solved it and I sent through the video to you through WhatsApp. I think almost all the students you are following, but I have seen that some of the students they are not watching. I will request to all of you that you follow the video, but I told you before following the video you read the question twice, then you start watching, it will be easy to you. The chapter which is going on, that is 6th, which is called the retirement or the death of the partner. From this chapter, so many things you have to learn. Now the complete practical sums which is going on, the illustrations, questions as well as the solutions which is already given in your textbook, that you follow it. Even if you do not understand in any place, you can tell me. Exercise question, the solution is not given. One by one exercise questions I am doing, but it is not possible for me to do the all exercise questions. But from that, which is the toughest, which is the hard type of illustrations or the adjustment it is given, like that questions I am doing. Today also, I selected the question number 14, 1, 4, 14. Yesterday, previous video 13 question number I have done. At the same time, the illustration 22 also I have done. And today, why I have selected the question number 14, because question number 14, the last adjustment is something different for that. I know that one. From the questions, whatever it is given, that 80% you will be able to do, but 20% you will feel difficult. I want to tell you, due to this 20%, you should not lose the 8 marks. So, particular to know this particular point, I have to solve this one. I already written it here, the solutions, but one by one amount I will explain it, that try to understand. While I am teaching you, that time if I write, it will take much time. For that I have written on the board first, and one by one I will explain it, that you follow it. The question number 14. Chirag, Jigar and Keshav, C, J and K are the partners, sharing profits and losses in the ratio of 3:2:1. That is 3:1 is the old profit and loss sharing ratio. The balance sheet of the firm 31/3/16 was as under. The balance sheet is given. The capital of C, J and K 30, 20, 10 GR. I told you, when you will read the question, you will take the pencil in your hand, and what are the effect will come, that will write either C means capital, or R means revaluations, D means distributions. General reserve 6,000 you have to distribute, creditors 44,000, asset sides land and building 50,000, machinery 20,000, investment 10,000, stock 10,000, debtors 20 minus 2 18,000 and cash 2,000. Nothing more much is given in the balance sheets. But what is given in the adjustment? The K is going to retire. Yes sir. On which date? 31/3/16. The following conditions. Number 1, let me read it. All the adjustment. After that, 1 second I will show how you will solve it. The value of land and building is to be increased by 20%. That all of you know. This will affect the revaluations account as well as the land and building account. Number 2, machinery is valued 90% of its book value. The meaning of the sentence sometimes it is changed. That you have to find out what is the meaning of that. That I will explain it. The second effect, revaluations account and machinery account. Third one, market value of the investment is 150% of its book value. That is third adjustment, which will affect the revaluations account and investment account. Fourth, bad reserve on the debtors is to be reduced by 5%. This also will affect the revaluations account and debtors account. Number 5, goodwill of the firm is valued at rupees 36,000. This will affect the capital account. Number 6, the 2,000 is outstanding for the salary payable to an employee. Number 6 will affect the revaluations account, and the outstanding salary, that is salary is not there, it will come outstanding salary in your new balance sheets. Number 7 is the most important. Number 7 it is given, Chirag and Jigar will bring necessary amount in cash in such a manner that amount due to K is to be paid in cash and the balance of cash may remain the firm's working capital of rupees 14,000 and their capital of the new firm become proportionate in the new profit and loss ratio. I know that one. So many students, they do not understand the last adjustment. Last adjustment is very important adjustment, and due to this adjustment you will not be able to do the complete sum that I know. Remaining all the 6 adjustments out of the 7 you will be able to do. But what is the meaning of the 7th adjustment? 7th adjustment is telling that at present, according to your old balance sheet, you are having cash of rupees 2,000, but you should have the cash of rupees 14,000 in your new balance sheets. That means cash opening balance is 2,000, cash closing balance would be 14,000. Apart from that, what they said more, and they also said more, that you have to pay the cash to Kesam. That also amount should be brought by the existing sponsor in such a manner their capital closing balance should be according to the new profit and loss sharing ratio. First of all, you have to find out how much their capital it should be total, and that you have to distribute according to the new profit and loss sharing ratio. So first of all, you have to know what is the new profit and loss sharing ratio, which is not given in your question. Also you have to know what is called the gaining ratio. It is also not given in the questions. But actually it is given indirectly. When nothing is given, that time what you have to do? Old profit and loss sharing ratio is 3:2:1. And Keshav is going. Keshav's share is 1/6. 3:1 means 1/6. So here I am writing it here 3:2:1. This is K. And K share is 1/6. So 1/6 is K share. And K is going out. First, this is called C. This is Chirag, this is Jigar, and this is Keshav. And see, the first Chirag share was 3/6. Jigar's share was 2/6. Keshav's share was 1/6. Now Keshav is going, so their remaining shares they are having now it is 3:2. 3:2 will be the new share. And old share is 3:2:1. When one is out and nothing is mentioned, that time you have to follow that 3:2 ratio is equal to C and A. So you might have think, sir, so there, what is the change of that? Beginning it was 3:1, now it is 3:2. Yes, there is change. What change? The old ratio is share is 3/6. But new ratio 3/5. This is 3 plus 2. So 3/5. This is old share is 2/6. New share is 2/5. So automatically that this 1/6 is included in this 3:2 ratio. So the gaining ratio is also 3:2. This is new ratio or the new share, and this is gain share. Gaining share and new share also same it is here. So whatever the amount of the goodwill you have to pay, but these two, Chirag and Jigar have to pay to K, that is according to the 3:2 ratio. The goodwill amount is given, I think 36,000. Now what I told you, you have already marked it where the revaluations account is coming. Now one by one revaluations account first we will do, and we will close the revaluations account. After that we will come to the partners capital account and cash account together, and last we will do the balance sheet. Some of the students they are doing all 4 together. Matlab revaluations account, partners capital account, cash account, and new balance sheets. If you feel it is easy, then also you can do. But it is no problem. So let me start the revaluations account. I told you the revaluations account in your balance sheet nothing is coming. No effect is coming from your balance sheet. All this one is coming from your adjustment. The first adjustment, value of the land and building is to be increased by 20%. Land and building you are having 50,000. 50,000 20% is 10,000, which is increased. So this amount, that is 10,000 by land and building. So here I am writing T. All of this amount you understood. First thing. The second effect will go to the balance sheets. That you can do it or you can do afterwards. That you keep in mind. The second point, machinery is valued at 90% of its book value. What does it mean of that sentence? Machinery is valued at 90% means at present how much machinery you are having in your book, that is 100%. Machinery you are having how much? You are having 20,000. So that you consider that is 20,000, and that value if you are going to sell into the market, you are going to get 90%, means machinery value is decreased by 10%, and it is decreased by 10% means 2,000. So 10% of 20,000. So two machinery is your loss side, and also you know this is your profit side. The third point, the market value of the investment is 150% of its book value. How much your book value is having? Investment 10,000. Investment value is increased. If investment value is decreased, what will do? You will write it here. If it is increased, you will write it here. But immediately it is decreased, don't write, because immediately you have to see the old balance sheet whether investment reserve is there, investment fluctuation reserve is there or not. If it is there, you have to make up, and remaining amount you have to write it. Here, investment it was increased by 150%. 150% means what at present you are having your book, old balance sheets, that is 10,000, that is 100%. And now it is considered 150 means that 50% is more. So 10,000 ka 50% is 5,000. That means 10,000 market value, which book value, which is market value is 15,000. So 5,000 is more. So this is first effect. Second effect, the investment it will go when you do the balances. Next is coming, the bad debt reserve on debtors is to be reduced by 5%. Bad debt you see in your old balance sheet, you are having 20,000 minus 2,000. 2,000 is the bad debt reserve against the 20,000. That means at present you are having 10%. But they are telling 10% is not required. 5% is enough. So 10% if it is 2,000, 5% will be 1,000. Also if you calculate 5% of 20,000, then also it is coming 1,000. So it is one type of profit, excess bad debt reserve you have calculated. Number 4 is over. Number 5, goodwill, that will go to the capital account. Number 6, 2,000 is outstanding for salary payable to an employee. So this is also one type of loss, or the expense is coming. Revaluation account deductions. So 1, 2, 3, 4, 5. Already you have marked in your adjustment. Out of the 7 adjustment, 5 adjustment, it was affected to the revaluation account, which I have already marked it. So revaluation account is closed. And if you add it, and you will get 16,000, and balance you will get 12,000, which you have to distribute. Here is to 2:1 ratio. Here is to 2:1. This is ratio. I wrote it here, but don't think it is the amount. Over revaluation account. Now what I will do? Next steps. What is next step? Partners capital account. Partners capital account, first you will draw it, or before that already maybe you have drawn it. First what you will do? First you will write the balance of the capital account. Balance of the capital account is how much you are having? 30, 20, 10. See, by balance PD, it is 30,000, 20,000 and 10,000. That is the opening balance. At the same time I told you, you will write the cash balance. You are having the cash balance to balance PD. That is your last year cash balance, last year closing balance, that is called 2,000. That you wrote it. Now what we will do? We will start from the old balances first. Balance sheet few item may come in the partners capital account. Distributions I told. You are having only one GR, general reserve 6,000. By general reserve 6,000. That is 3, 2, 1. But before that one, first you will transfer it. I have forgotten to say. This will transfer 6, 4, 2. 6, 4, 2. That is called profit on revaluations. So first you will write the opening balance, then you will transfer this balance, then you will go to the balance sheets. If distributions is there, that you do it. After that you come to the adjustment. First adjustment capital account will not affect. Second adjustment capital account will not affect. Third adjustment capital account will not affect. Fourth adjustment capital account will not affect. Fifth adjustment capital account will affect. Goodwill. how much farm of the goodwill is 36,000. That is farm's goodwill. There may be a confusion. Sometimes Kesav's goodwill is spelling, sometimes farm's goodwill is spelling. But in this question, that is Kesav goodwill is not said, farm's goodwill is said. How much? 36,000. So 36,000 ka 1/6, because his share is 1/6. 36,000 ka 1/6 how much? 6,000. So 6,000 K should get for goodwill, and 6,000 amount will be credited to K's capital account and debited to these two, because both are getting which ratio? 3:2 ratio. 3:2 ratio of 36,000, sorry 6,000, if you calculate it, the one will give the 3,600 and another will give the 2,400. So that is here, that who will give, C will give 3,600, so C's capital account debit, C's capital account debit to K's capital. C, this is the journal. C's capital account debit to K's capital, this is the journal. So this is C's capital account debit to K's capital and K's capital account debit by C's capital. This is the meaning of that. C's capital account debit to K's capital 3,600, J's capital account debit to K's capital 3,600, sorry 2,400. This is debit, and this is credit. Now what is the journal? C's capital account debit to K's capital, J's capital account debit to K's capital. This is contra entry. When I taught you the cash book, that time you have seen that one, that both the sides entry is coming. The last one, the seventh one, is the most important. The what is seventh is given, the Chirag and Jigar will bring the necessary amount in cash in a such a manner that the amount due to K is to be paid in the cash and the balance of the cash may remain in the funds as rupees 14,000 in the working capital. Okay. Now we see the opening balance of cash is 2 and closing balance of cash is how much? 14. It is given in the question. Closing balance you should keep. And how much you have to pay to K? 19,000. How you are getting the balance of the K? Because here you see the find out the K first. Because 1, 2, 3, 4, 5. All these 5 items already are in K. Okay? So the balance if you find out the K is coming 19,000 because debit amount nothing is given, and this is you have to pay to cash. So this is K account debit to cash. So K closing balance you have to pay to K 19,000. That is you are getting 19,000. Correct? Now question is that opening it was 2. We have to make closing 14 after paying 19,000 to the K. That means this amount is required for bringing. It should be brought by C. It should be brought by J. How much? 18,600 and 12,400. Now question is coming, sir, how do you know that how much will bring Chirag and how much will bring Jigar? That is questions I am coming here now. Here you see, this is sometimes some of the cases, this is I told you, most important exercise, because last adjustment is most important. Sometimes some of the amount you have to calculate back through back calculations. How do you know the back calculations? Malab, how much amount the C will bring, how much amount J will bring, that to know this one, you have to calculate through back sides. Malab, capital balances you have to do it first. So what will do? Say asset side, whatever the amount should come, asset sides, whatever the amount should come, it already came without doing the last adjustment. I will show it first. So you follow it, what I am telling you. Once again I am telling you what is called the back calculations. Land and building. The old was 50, it was increased by 10, so you got 60. Machinery. The old was 20, it was decreased by 2, 18 you got it. The investment old was 10 and increased by 5, so you got it 15,000. The stock, I think stock there is no change, so 10,000 is 10,000. Debtors, also you got it, the 20,000 minus 1,000 because 1,000 is there. So that amount also you got it. And cash also you got it. Nothing is left in the asset sides. So asset side is ready. Now question is there, on the basis of this asset sides, if asset side is 1,36,000 is coming, liability side also it will come 1,36,000. And liability side you see that except capital you do not know. You think that you do not know the capital. Creditors you know. Creditors is 44. There is no change. And outstanding salary, it is given here. That also you know. It is 2,000. So what is left in the liability side? Only capital is left. What will do? 1,36,000 minus 46. This is 44 plus 2. So 1,36,000 minus 44 minus 2, you will get 90,000. So their closing capital for Chirag and Jita should be 90. Got it? This is called back calculation. And that 90,000 in which ratio? 3:2 ratio. Because new ratio it is given. 3:2 ratio. So his capital should be 54 and his capital should be 36. Do you understand? Because this is called back calculation. You add this all assets, already you got it, and the liability side 3 items is there. Out of the 2 you got, 1 you did not get, that is your balance. So 90,000 is the closing capital for these 2, which should be 3:2 ratio, 54,000 and 36,000. Now this is not closed, still now, this is also not closed. Now you come, his capital should be 54. So here I wrote it here, his capital should be 54. And how much is his capital? It should be 36. I wrote it here 36. Now question is there, to become 54 he should bring cash 18,600 and to become 36 he should bring cash 12,400. This is the most important. So 18,600 is the cash which he will bring and 12,400 is the cash which J will bring. So this is 18,600 cash and 12,400 cash. That too will bring. This is the most important point what I want to tell you. Once again I am telling you. Almost all the sum you will be able to do. 100% out of that 90% you will be able to do. But one or two illustrations, one or two adjustment you will feel difficult. This is the things which you have to understand. By getting the questions from this chapter, first you will find out the new share if it is not given. Then you find out the gaining ratio. Sometimes you have to calculate. Then you start doing the revaluations account, then partners capital account, cash account and balance sheet. Generally, revaluations account first we are doing, after completing capital account we are doing, but here capital account we cannot close. So what we are doing? After doing revaluations account, then we are coming here and first we are completing this one, then we are completing this one, then we are completing this one. Once again you read the questions. After that, if you have any doubt at any time, you can call me or through WhatsApp you can send your doubt. I will clear your doubt. So I hope that everyone will follow this video. Okay? Starting well. All the best. Bye.